Alright, what's up motherfuckers? Time for a video. It's been a while. So, I'm going to be talking about a few things today. First of all, we're going to be touching on SPY and what's going on with SPY right now. Obviously, we're talking about AMC. And towards the end of the video, I'm going to cover GameStop briefly. Just showing the synchronization between AMC and GameStop and what we're looking for going forward. So, starting with SPY. Here is the macro perspective on SPY. I haven't shown this in a while, so I figured I would throw it in. The daily chart on SPY, the descending broadening wedge from all-time highs that we traded in for a year, the breakout and retest of the wedge here, the ascending triangle that we transitioned into, and then the breakout of that, this gap up right here. If you remember me saying multiple times that I am not completely convinced with this being the retest, this breakout retest right here, we got a gap up from there and then upside all the way to 460. I said multiple times I was not convinced with this being the retest. It looks like we're coming down to retest this, and I'll get into that with the symmetry chart. Obviously, we're not going to be retesting the actual trend here, but this red horizontal line running across 418 was a very strong resistance for pretty much a year prior to the downside that you saw from all-time highs. This was support, acted as support right here, and then resistance, multiple rejections, one here, one here, one here, 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 and here. So rejecting this trend here at 418 multiple times, the breakout, and now we are pulling back. Symmetrically, it looks perfect still. I'm going to get into that. 181 days in a row closing over the 200 EMA, but today we actually wicked through it, closed right above it. I'm expecting that we're going to probably see some more downside here and end up closing below the 200 EMA. So that streak is going to be broken, unfortunately. It doesn't really matter. But yeah, that's pretty much it for this. I want to jump into the symmetry chart now. And before I do that, just so everyone's on the same page here, I've been tracking the symmetry of this bottoming action on SPY for pretty much since the beginning of the year, since January 2023, tracking the symmetry of this. This was the original chart, diamond bottom, the descending broadening wedge in the blue, and then the symmetry, the symmetry playing out here, the bottoming action on SPY. Obviously, this is an old chart. The newer chart, here it is, and this looks absolutely great. The colors are different, it's fine. But once again, all-time highs on SPY, your descending broadening wedge is not here. The ascending triangle is also not here. I'm just showing the symmetry here. So the blue box is the middle, your lowest low here. You also have your highest high in range here. One break above this range here at 418. This very important trend here at 418. One break above coming into the red, breaking below this horizontal line down here at 380. On both sides, you break below it. On the left was a little bit lower to retest the descending broadening wedge. Coming up to 418 on the dot on both sides, rejecting that, coming down to 380 on the dot on both sides, finding a bounce. And then you get the upside all the way to 460. Here was that move at 430 that you see here, the cup and the handle that you see here, and then the final push for the move to 460 that you see here. And then from there, expecting a pullback. Now, I mentioned multiple times as well, when we did hit this 460 level, I wasn't sure how this was going to play out going forward. I wasn't sure if the symmetry would continue to play out. It looks like it's playing out perfectly still. So from the 460 point, you pulled back pretty drastically, actually breaking below this line at 418. Multiple wicks here, breaking below it. That's what I'm expecting over here. Now, it's possible we find a bounce at 420. There's 420 is a very strong support level for us right now on SPY. I'm leaning more towards we're going to at least touch this trend at 418 before we reverse back into upside, which is fine. This pullback, we were looking for this the entire time from the 460 move, and now we're going to be looking for this movement just over here inverted. So assuming we're going to be coming down even lower on SPY to this trend at 418, which is fine, establish support here and then move higher from there. That's going to take some time. Also, just keep in mind from October 2022 until today, forming higher highs and higher lows here. So each wave is forming higher highs and higher lows to the upside. And I think that was everything I wanted to cover for this. Oh, one more thing. On a very macro level, this is an inverse head and shoulders. So this would be the head right here. Here's the left shoulder to all-time highs, and now the right shoulder is going to be forming over here, establishing support on this 418 level. All right, getting into AMC now. Macro perspective on AMC, starting with this as always, starting from IPO. Your January equivalent here in the green that you see here, the pullback into the W, the pullback into the W, into your June squeeze in the yellow, the V shape, and then your macro break, this blue box that you see here, the descending wedge that plays out from there, all the downside going through it, the flat portion, and then the reset into the new macro, which is where we are now at the end of this current macro, looking for the new macro, which will start with the squeeze. Once again, this trend in white is the most macro trend on AMC, starting from IPO all the way to present day. Your first bounce off right here at support, come down, bounce off it at support again, bounce off it at support again, up to the top of the trend, come down, bounce off it again at support, once again at support, and then you finally break below it and reject it, which is the original flat portion here. So you play out the flat, reject it again here, and then you finally gap up over that, your macro break into a new macro and your January squeeze here. Pullback actually bounces right off of that trend, retesting right on that trend into your June squeeze, and then the macro played out the exact same way again. All the way down, descending wedge, and found a bounce, and now establishing support on this macro trend once again. Before I move on from this, I just want to touch on this one more time. The first macro, so from here to the top of the June equivalent peak, this yellow peak here was a 90% move. That was the first macro. The second macro from here to the top of the June peak, 1200% move. So it's pretty safe to say going forward, the next macro that we get will have a higher peak, a higher percentage move, and that's what we're expecting for AMC. Once again, my price target being $1,400. Very possible we just fly right through that. The Fibonacci spiral I covered multiple times is pointing at a price target of roughly $2,600. I really wouldn't expect to go too much higher than that. We could talk about that when the time comes. So that's it for that. Another perspective on the macro for AMC, exactly what I just showed you with some colored boxes now. So again, from IPO, your January equivalent, the W, your January equivalent, the W, your June equivalent, the V shape, your macro break, this gap down, your macro break right here, and then the green, red, and blue, just trading in the descending wedge here, green, red, blue, and then the drop to your flat portion. Got this double top type move that you see right here. One second. The double top move that you see right here. Second bottom is a higher low on the daily on both cycles, the tri-peak, and then your third bottom, the all-time low and lower low on the macro, which is where we are now, and also establishing support on the most macro trend on AMC, which also this macro trend is meeting zero roughly right at the new year, right around 2024. This macro trend from IPO is meeting zero. So just also keep that in mind. So the macro looks great. Here's the macro trend. I'll fly through this because I've covered this multiple times. So halted on your January peak and your June peak, halted. Play out the flag, break down from it into the descending wedge, halting every single time you come up near resistance all the way through this, 3 halts there. Then you finally get the breakout move, again halted to come down and retest on the wedge. This trend was respected for over a year, and every single time we came anywhere near this resistance line, we were halted, and obviously we were halted the January and June squeezes, and halted on the breakout to come down and retest the macro descending wedge. Moving on from that, the breakout and retest now. Here was the breakout move, and then the retest here. This descending trend that we rejected multiple times. First rejection here, second rejection here. Here's your first test on the wedge. Bounce off, reject that trend again, come down, and then finally broke out. And we have just completely flatlined here. Believe it or not, this is an uptrend. We are forming higher highs and higher lows. But just looking at it like this, we have really flatlined here, which is bullish. So moving on from that, Now getting into the flat portion of both cycles. And I've covered this multiple times as well. And what we're looking at here is, where can I show this? Right here probably. What we're looking at here is the original flat portion compared to the current flat portion. So just getting into that now, which tracked perfectly for a very long time, since 2023 until now. Just a very, very exaggerated bottom for our third bottom, but it makes sense being that both macros ended with an all-time low. So just starting with the beginning of the flat portion here, here is the break below, and your first bottom very choppy down here, gapping up from your first bottom into this double peak type move, coming down to your second bottom, which is a higher low on the daily. And on this side, same thing, coming down to your first bottom, very choppy, get the gap up, the double peak type move, coming down to your second bottom, which is a higher low on the daily. Once again, we get this move right here on the side in the yellow, which is rejecting this yellow trend, which is a very important trend. We're looking for a break above this for our macro break, just like you see right here, looking for a gap up over this trend. So from your second bottom, the tri-peak, the 3 pokes above that trend, and then rejecting it again to come down to your third bottom, which is the lowest low in the flat portion and also all-time low on both cycles, the 2021 cycle and the current cycle, landmark-wise. From the flat portion, your third bottom is your lowest low and your all-time low. Again, we're tracking through this faster from the beginning to your third bottom, 284 days. Previous macro from the beginning to the third bottom, 320 days. Roughly 1-to-1, a little bit faster in the current macro. And also keep in mind that this yellow trend rejecting here, this cup move that you get rejects it to your second bottom, and you also reject it from your third peak of the tri-peak to your third bottom. And in the current cycle, exact same story, rejecting this cup move to your second bottom, also gapping up from your second bottom. I forgot to say that before. And then rejecting it again, third peak of the tri-peak, rejecting it to come down to your third bottom. So that's that. EMAs look great as well. I've covered this multiple times. 20 EMA in the white, 50 EMA in the green. So the 20 starting under the 50 here, get the double cross. Actually 2 pokes above this yellow trend, and over here same thing, starting under the 50, 2 pokes above this yellow trend, come back underneath, 2 pokes above in the tri-peak, come back underneath, 2 pokes above in the tri-peak, and then the 20 crosses the 50 to the downside again to come down to your third bottom. As you see here, 20 is coming lower and lower every single day, roughly 11.20 right now, the 20 EMA. And we're looking for the price action to meet the 20 EMA, and we're looking for a gap up over it. So that's what we're going to be looking for. And then from there, we're looking for the 20 to cross the 50, and we're looking for a break above this yellow trend here at roughly $48. So that is that. Now getting into the channel itself, I covered this in my last video really quickly. I'll cover it again. So what we're looking at here is from your third bottom, you form an ascending channel, bullish channel from your third bottom. And we have a channel right here, bullish channel from our third bottom. So looking at that now, and I mentioned this in my last video, more than likely where we were in the tracking was the break below the trend, chopping to fight it. So here was your third bottom, all-time low. Here's your third bottom, all-time low. You form an uptrend, and then you break below the trend on both sides, chopping to fight it, or chopping to reclaim it. And that's where we are now. So chop, you break below, poke through, as you see here, this wick, the equivalent would be right here, and then you break back below again, and you're just chopping down here until you eventually claim, and then gap up from there. With that being said, I am still paying attention to this, but what I'm tracking right now looks absolutely great. If you're in a Discord, you know I've been posting update pictures every single day. Called high of day yesterday, literally to the penny. 850 high of day yesterday, and pretty much from there I was saying that we're going to be pulling back, and then that still stands true. That's what we're looking for going forward now. But what we're looking at on the left here, this is the current price action on the right. What we're looking at on the left is the price action that led up to the breakout move, that 100% after hours move that we got right here. This move, we're looking at this price action here that led up to this gap up, which is tracking beautifully. So the cup in the purple is the beginning of it on both sides. You actually get this little shelf here. on both sides as well before you actually get the cup. Then you have two peaks, second peak is higher, two peaks, second peak is higher, and then a W in the middle of the move here. So your left leg, bounce up, right leg is lower, left leg, bounce up, right leg is lower. You do have a very drastic wick here. This was pre-market, this wick, but it is a lower leg on the right on both sides. Bounce up from there, lower high than the green. Bounce up from there, lower high than the green. And then you have this channel here. It's not really a channel. I just have the trend lines here for tracking purposes. So this move that we got to 850 yesterday was the equivalent of this right here. This move right here. Again, you know, from that move, I was like, all right, now we're going to pull back. And that's what we're doing now, is pulling back. Double topped actually early on in the day. And then from midday to end of day, just very bloody and pulling back. I am expecting to pull back and get the rest of this chop here before we get this move here. This move is coming very soon, which more than likely is going to be a gap up and a very, very big move to the upside. Really quickly, I could just touch on this. From the beginning of this until the actual gap itself was 29 days. And in the current cycle, not the current cycle, the current tracking, current iteration, 19 days. So 29 here, we're on day 19 in the current. I'm expecting this move to happen probably within the next, I would say, 5 to 10 trading days. There is a chance we see this move Friday after hours. That is definitely on the table, where tomorrow I am expecting downside. Just come down even lower and you get the rest of this chop here before you start climbing back to the upside and get the gap up. So I would expect to come down. Maybe we don't come all the way to the trend. Maybe we do. But come down, chop down here, and then the next time you bounce up from there to the top of this trend, that will be the gap up. So it's very possible what tomorrow looks like, Wednesday looks like, is we come down and we start the chop. Thursday, Friday, pretty much same thing. Thursday, very choppy, ups and downs, and then Friday, maybe on Friday you get this uptrend that you see here, and then after hours you get the break above. If this gap doesn't happen this week, if it does happen this week, 100% I would expect it to happen after hours on Friday. If it does not happen this week, almost 100% certain it's going to be happening sometime next week. But this week is definitely not off the table. Obviously, I can't control time. I can't make this play out any faster. What I can do is track it. And I'm telling you, this is tracking absolutely perfectly. We're getting this move very soon. So that's that. Again, looking for downside tomorrow. That's it for that. Now, RSI, OBV volume update, weekly perspective up top on AMC, both descending wedges that played out. Volume on the bottom, again, decreasing volume all the way through the macro until the end of it, where it starts to pick up into all-time high volume on your January squeeze. And then from your January squeeze, descending volume all the way through the macro, all the way through this descending volume, lower and lower volume spikes that you're seeing here, all the way to the end where we were barcoding here, very choppy, very low volume before we got the breakout where volume started to pick up, into the retest where volume is sitting at all-time high levels. So that looks great. OBV, once again, increasing OBV is a very good indication for upside to come on AMC. Prior to AMC being a meme play, OBV was relatively flat, and then it legged up in January, once again legged up in June, and from all-time highs on AMC, roughly $350, $400, all the way down to $7, OBV has been sitting pretty much at all-time highs here. Had this descending trend, which it broke out of and retested twice, bounced off, and now is curling back up towards curling back up. So OBV looks great. Volume looks great. RSI on the weekly is still oversold, which also looks great for us. And I think that's pretty much it for this. Moving on from this into the macro fractal of AMC. Once again, AMC is reiterating January 15th on every time frame. Here is January 15, 2021, 1 minute time frame on the left. AMC Macro weekly time frame on the right. The W that plays out here in the yellow box on both sides, your January squeeze equivalent, pull back into a W, higher lows, pull back into a W, higher lows into your June squeeze that you see here. The flag would be right here, and then the descending trend that you have here. 1, 2, 3, 4 touches on the top. 1, 2, 3, 4 touches on the top. 1, 2, 3 bottoms descending. 1, 2, 3 bottoms descending. From that third bottom, you actually form a bit of an uptrend here before you reject the trend, knife, and then V. So from the third bottom here, this was an uptrend, forming higher highs and higher lows here. Hit the trend, knife into the V. That's what we're looking for now. We're looking for some upside here, and then a gap up macro fractal break. You can see it right here. Here's the V and the gap up over the entire range right here. Being that this is a 1 minute chart, this is a micro fractal break. Being that this is a weekly chart and AMC is pretty much the full macro in AMC, the current one at least, this is a macro fractal break. We're looking for the same thing pretty much. So when the rest of this plays out, when we get the rest of the uptrend here and gap up over that $48 mark, the macro fractal break we're looking for, we're going to see some pretty crazy price action. And I still stand by this. I would not be shocked whatsoever if we overnight gap up to all-time highs on AMC. That's what I am looking for. So just moving on from that, getting into AMC and GameStop really quick. 21 minutes in. I'm not trying to make this a 45-minute video. So AMC and GameStop, here is the January squeeze here for both AMC and GameStop. It's the same fucking stock. The June squeeze here, and then just following the line through. The orange line is GameStop. Candles are AMC. Movement tracked perfectly all the way through this, all the way down through this, and then your breakout on both AMC and GameStop and your retest. And GameStop is in a very similar situation right now with support meeting resistance sometime late next week as AMC is ready to gap up from this bottom, this retest that you see here. So this looks great. AMC and GameStop are the same fucking stock. And just really quickly, I'm not going to go too crazy into this, but GameStop's macro perspective. So here was the previous macro, the all-time high equivalent here. Here is your macro break. And before I actually cover, I'll talk about this first. Here's the original macro break on GameStop. So this is the beginning of a new macro right here. So this is the squeeze pretty much. It doesn't look like a squeeze. It played out a lot slower. Before this was an actual meme play, obviously, just like AMC's original, squeezes weren't really squeezes, but just upside. The beginning of a macro, there was much less volume. Was not a popular stock. It wasn't a meme stock, so it played out a little bit differently at the beginning. But I want you to pay attention to this range here, this white dotted line. So from the gap up to where you actually gap up. So I have this range here. This is the end of GameStop's macro. This macro right here. This is the end of it, the flat portion of GameStop. And this right here is your macro break on GameStop. So pretty much lining up perfectly with the previous macro break. And right here is pretty much where you get into the straight line part of the squeeze. So I thought that was pretty interesting. But going over the actual tracking now. So here would be the top. Here's your top. Downtrend. And then you get this double top type move, obviously not as high that you see right here. The cup, and then you get your leg down from that yellow arrow. You have an ascending W here, ascending W that you break down from. Again, more downside into a W that you see here, a W again, and then another leg of downside in the green arrow, and another W at that bottom. So a W, and then you have this descending trend and the support, descending trend, support, the break out of this trend, which is where GameStop is. It's at the end of its macro right now. The break out of this trend, the retest, and then you probably get a little bit more upside. You will gap up from there. That is your macro break on GameStop. And then you're looking for a squeeze. So I'm pretty much just showing this because, I just showed this where AMC and GameStop are the same stock. And they're going to squeeze together. And I'm showing this to illustrate to everybody that GameStop is also at the end of its macro. You're just looking for the break out of this resistance here. And once again, the support is meeting resistance late next week. So this looks great. That's pretty much it for the video. I think I covered everything, 25 minutes in. I really don't know what to say anymore. I've covered the fractal tracking of both AMC and GameStop. I've showed other tickers, cryptos, XRP, for example. Here is a side-by-side of the original macro of XRP and the current. It's literally a copy and paste. The crypto macros are insanely perfect. literally a copy and paste here. So your first peak, your second peak, first peak, second peak, you, downtrend, breakout, flat portion, breakout, looking for the flat portion now. 3 touches on that trend, 3 touches on the trend in the previous macro. It's literally a copy and paste. And what we're looking at here is the current macro, which is this, what you can actually see, versus the previous macro, which is right here, all this flat. So that's XRP. I've covered Dogecoin, same story, both macro perspectives side by side here. Same shit with Dogecoin, looking for the rest of the flat portion of Doge here into a squeeze. I've covered silver, which dates back to fucking 1800. Before there was even algorithmic trading, fractals were still fractaling. So you got the echo here, lower leg on the left in the W, lower leg on the left in the W, the break out of it, the retest, the break out of it, the retest. That's your peak 1, your peak 2, the cup, and I've gone over this. There's a trend here, a triangle, waiting for the break out of that, and a MOAS move on silver. So that's silver. What else? SPX, again, dating back to 1800s, before there was even a fucking algorithm here. Fractals were fractaling. So just repeating, blue, waving the green, megaphone, 3 touches on the top and the bottom, bull run to all-time highs. Blue, waving the green, megaphone, 3 touches on the top and bottom, bull run to all-time highs. Blue, green, megaphone, you know. And that's where we are now. We're in the process of the bull run to all-time highs. So just pulling back for the symmetrical equivalent of this side, the right shoulder of the inverse head and shoulders. Once this right shoulder plays out, SPY is going to bounce off the trend at 418. Wouldn't be surprised if we wick through it a little bit. And from there, SPY will be climbing to all-time highs. So that's that. This is an interesting one. DXY, dollar index, is about to fucking take off, which, you know, doesn't make any sense, but fractals are fractaling, and DXY is about to fucking take off. So here's the first macro on DXY. You got this W, lower leg on the left, and the current macro, W, lower leg on the left, to climb out, and then you drop down even lower, and then you break above the trend, retest it, break above the trend, retest it. That's where you are right now on DXY, looking for this right here. So yeah, that's pretty much it. The market's complete bullshit. It's completely fake. It's all fractals and fibs. Fractals don't repeat perfectly, but they rhyme. They look very similar. They're never going to look exactly the same. That would be ridiculous. But that's that. I think that's it for the video. I'm like a fucking half hour in right now. Not promising that I'm making an update video tomorrow. But yeah, AMC is about to see a big move to the upside. I would say probably within the next 10 trading days, and very, very possibly after hours this Friday. So just looking for the pullback, the rest of this chop at the bottom of the channel to climb back up to the top, and then a rocket from there. And more than likely, as always, this move will be after hours or pre-market. Almost positive it's going to be after hours. So very possible we see this Friday after hours. If not, almost 100% certain this will be next week. That being said, that's the vid. Catch you guys in the next one.